Ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the Aussie versus US dollar. Today's date is March 12, 2024. Let's get started. Yeah, the Aussie versus US dollar sometimes gets a boost from increased stock prices. We're seeing that sometimes, and then other times it gets a hit on the back of higher interest rates, and we're seeing higher interest rates. So we have higher stock, we have higher interest rates, and the Aussie versus US dollar is up and down in trading here today. The last move has been more to the downside. We've made new lows in trading in the current 4-hour bar. This is the 4-hour chart for this currency pair. And in the process, we fell below a level that I outlined in yesterday's video. That level came in at 0.6594 in trading a few weeks ago. The high price came up to that level in trading last week. The high price moved above that level and used the level as support to base and move to the upside. In trading yesterday, the price came down to test that level and found support buyers moving up to a high price today after the CPI volatility that took the price up to, well, this old level right through here, which goes back to this low going back in time to the end of December, early January, and found willing sellers against that level and started to push back to the downside. We have this other swing area here, which is pretty key in my book. It's a level that had all these different highs through here, forming this ceiling in over a few week time period here before moving to the downside. We returned to the area in trading last week and traded above to the high of the range and then low of the range, and basing it against the low here before moving to the upside. You can see it more clearly if I take all this stuff out right through here. And in trading this week, the price has been above and below it, but the last bar on this 4-hour chart is finding resistance against the low of that swing area at 0.6612, keeping the sellers probably more in control, at least in the short term. We're also back below the 38.2% retracement. I like to use that as a barometer as well for buyers' interest. When you have a sharp move, a trend move like this, you want to see the price stay above the 38.2% retracement. And we did for a lot of last week, or half of last week, and then for the first few days of this week, spent most of the time to the upside, but now back below that level. So getting below this yellow area, getting below the 38.2% retracement has me thinking more to the downside. The one thing that I'd like to see going forward is a move below the 0.6594 level to remain below that level. If we can do that, then we have other levels to deal with, including the 100-day moving average, the 200-day moving average, the 100-bar moving average on the 4-hour chart, and the 200-bar moving average on the 4-hour chart. Those come 1, 2, 3, 4 in succession between 0.6542 and 0.6568. So we're heading back into the crunch area right through here, where I just had a lot of stuff going on over the last 5 or 6 or 7 or 8 weeks. So expect a lot of support to be had in that area as well. So nevertheless, we know our risk. Stay below the 38.2% retracement would be the best case scenario now for the sellers. Get below 0.6594, and we could open the door for potential move to those moving average targets. That's my look at the Aussie versus US dollar. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.